Alright traders, so for this video, a special shout out to Jeremy, Tan and Chu. Alright, what they requested is for me to actually share more about the 1, 2, 3, 4 structured trading strategy that I adopt. So in this video, I'll be going through more in-depth in that particular strategy. Alright, having said that, it's purely based on technical support and resistance plus a little bit of Fibonacci ratio. So what I'd like to share with you before going in-depth is that a lot of time traders tend to focus only on the technical strategy, alright, and they simply plug and use it for their own trading. But I'd like to first warn you that you can't really just plug and play any strategy that you actually heard of or someone actually shared with you, because you first need to really understand what is the concept behind this strategy. And if you just simply plug and play without really understanding the basics or the concepts of how these strategies are being developed, you probably won't understand, and it'll cause you more harm than actually benefit you in your trading. Right. So having said that, this 1, 2, 3, 4 strategy is more of a trend following approach. All right. In which this strategy perform better when the currency market is trending, and if it's not really trending, you won't be able to find any valid setup as well. Alright, so let me share with you how we can quickly filter off and select some pairs that are actually in a trending environment. When I mean trending, alright, this is something that you also need to take note of which particular time frame you are referring to. So for me, it's really just on the H1, H4 time frame. So to quickly filter it off, this is a very good website which it's free anyway, so you'll be able to visit and make full use of it. It's called Thinbits, .com. You simply go under Forex and Performance. Under the weekly tab, you can quickly have an overview of in terms of 1 week relative performance, comparing it in terms of US dollar. What you see over here is you can see Kiwi Aussie perform really well, alright, even in Canadian, against the weakest currency in terms of Japanese yen and US dollar. So this gives you a quick idea of taking the strongest currency, pairing it against the weakest currency based on the weekly time frame, right? Will give you a pair that is trending nicely, alright. So for example, Kiwi dollar, Kiwi yen. Alright, so let's go back to the chart. Over here, I've selected some of the examples that I would like to share with you. Right, for example, you look at Kiwi yen trending upwards nicely. Alright, Kiwi dollar as well, dollar CAD, alright, going down, as well as Aussie dollar. Alright, so let me walk you through the thought process of this strategy using the Kiwi yen. Alright, so 1, 2, 3, 4, as it suggests, we need to have 4 levels, alright, or 4 points. And simply picking from this point, alright, this starting point towards there, alright, what we are picking up is in terms of structure high and structure low. Alright, so you can see this is a low. Alright, it forms a high and then it comes retrace back, forming a higher low, and then it breaks the previous level to form a new high. Alright, so simply by this structure high, structure low, we have 1, 2, 3, 4. So once we establish, alright, 4 points, alright, 1 to 2, 2 to 3, and 3 to 4. Alright, what we are waiting for is once we have this, what I do is I'll use my Fibonacci level. Alright, I'll start from this one, the recent low to the recent high, and what I'm interested at is to find a confluence with my previous structure over here. Alright, and if you look at this entire level is actually previous structure level. So if I put in my 50% Fibonacci, you can see this whole area coincide between the 50 to 618 retracement. So this is what this is the level or the area that I'm interested to look for a potential entry. And of course the entry will be in terms of the direction of the overall trend, right? So currently we have 1, 2, 3, 4 moving up. I'm expecting that price comes down towards this level, which nicely confluence between Fibonacci as well as the previous structure level to actually continue this trend. Alright, so once you identify that, right, the first step is to identify 1, 2, 3, 4. The next is to pull in your Fibonacci and see if there's any confluence with your previous structure level. Alright, so if there is, how I'm going to enter is I'm going to enter at conservatively at 618. My stops will be just below 786, and my first target will be at the previous high. Right, of course, more conservative, you can use the low instead. So this strategy, the benefit of it, or I would say the advantage of it, is that the risk to reward ratio is pretty awesome, right? If you look at this trade itself simply give you 1:2, right? And of course, if we decide to take target 2, right? Target 2, I'm using the extension of 127, right? Inside, right? 127, you can see that 127 is I aim for that. My risk to reward for this trade goes up to 1:3.7, pretty high. Alright, so it's not a very complicated strategy. It's pretty simple in a way. Alright, but what you need to do is you need to first identify the trend, and then using Thinbits, alright, this website can help you to quickly filter off some of the pairs to focus on, and then after that, on the technical level, alright, you want to identify 4 points using structure low, structure high, structure low, structure high, and then after that, once you have identified the 1, 2, 3, 4 points, you pull in your Fibonacci tool to find for confluence with your previous structure. Alright, and then my entry will normally be at the 618, conservatively. Alright, stops below 786, and my target will be at the previous high. Alright, so let me walk you through another example. Alright, perhaps using dollar Canadian. Alright, so if you look at this, we have high, low, high, low, high, low. Right, so if you look at this, simply this itself presents a very nice structure, and if we pull in the Fibonacci tool, alright, from this level to this level, we do see some confluence, alright, coming between the 786 over here. Alright, let me pull in my right level. Right, so what we have over here is 1, 2, 3, 4. So what I'm interested at is for price to come back around this region. Alright, this whole level is my key interest level, and I'll be looking for a shorting opportunity riding on with the overall trend. Alright, the question is, will price eventually reach it? I do not know, right? But if it doesn't, then I'm not interested in taking the trade. But for example, if price does come back up to this level, I'm looking to short, right, at just above the 786, confluence with previous structure level over here. My stops will be slightly above the previous high. Alright, in this case, since I entered at 786 Fibonacci retracement level, my stops will be above the 100%. Alright, my target will be at the previous close. Once again, if you look at the risk to reward of this trade, you can go up to 1:2.23. Right, not too bad. Right, and of course, if you aim for TP2, right, this trade risk to reward can go up to 1:3.6. Alright, so it's not a very complicated strategy, as I said again. It's simple. And let me show you, one of the trades that we are holding, and it's currently already running. Right, it's actually on H4 time frame. It's the pound franc example. Alright, so once again, if you look at this segment of the chart, it's very clear that you can identify 1, 2, alright, high, low, high, low, high, low. Alright, so we are not interested in taking the previous historical part because it's way too bad. What we are interested in is simply 4 points. So if you count from this one, right, you have 4, 3, 2, 1, or the other way, 1, 2, 3, 4. Alright, so once we have 1, 2, 3, 4, we identified that this is the previous structure low. Alright, I pull in my Fibonacci from the previous high to the previous low. You can see that at 618 it confluenced nicely with my previous structure level. Alright, somewhere around here. Alright, previous structure level. So that's where I entered with my stops above and my TP below. Alright, so this is a trade that our clients has taken, right, including ourselves. We are still riding on this trade. So you can see that in terms of the TP1, this trade gives us a risk to reward of 1:2.7, and TP2 can give us close to 1:4. So the overall strategy is once again very simple, but the concept that you need to really understand is do not just simply plug and play. into your own trading plan, alright, but really think through whether this strategy suits your personality, whether it fits into your overall trading style. If it doesn't, right, it's gonna hurt you more than benefit you if you simply just adopt it without really understanding it. Alright, so once again, if you have any other questions, alright, do drop us comments. Feel free to let us know what kind of video you like to hear from us, and hopefully, through all this series of sharing will eventually benefit you, giving you different insights as a trader's perspective. Alright, so with that, I'll talk to you soon.